Recently, several members of the Unrivaled Nation asked me if Crocs, C-R-O-X stock, is a deep value play. My first instinct was to check with AI ticker chat to get a feel for the range of hypothetical scenarios that leveraging artificial intelligence would surmise or would guess. And here it is. It's suggesting several 100% upside for Crocs stock based on a range of potential revenue growth, profit margins, and earnings multiple 5 years from now. So this is a very interesting setup. It's got me interested. And then I'm doubly interested when I also see that Crocs is showing up on Joel Greenblatt's magic formula list. He's written a couple of books on how if you buy certain types of stocks, and I'll talk about the key aspects in just a second, these magic formula stocks, that as a basket, they've historically dramatically outperform the index over time. And so when I check on the Magic Formula website, I see Crocs is prominently listed there as of today. So now I'm really interested in learning more. And once again, this is my first time really actually looking into Crocs. When I understand the Magic Formula, it comes down to a couple of components. The first is this cheap? This is based on assessing, the market cap plus the debt that the business might have relative to the earnings power of this business. It uses EBITDA or EBIT to usually calculate that. It's really just trying to say, is this cheap? Does this generate an interesting multiple of free cash flow? And the other key metric is, does this business have high quality? Where you're saying, if you put up, let's say $100 million into this business to start this business, do you generate a high return on that $100 million? Because if it's only, let's say, $10 million return, a 10% return, that's not great. But if you put in $100 million and you're generating $100 million each year, that's mind-blowingly attractive. And so those are the types of, questions. Can you get a compelling return on invested capital? And is it cheap? And looking the first question with, Crocs and trying to think about, is it cheap? I'm looking at their historic free cash flow. I see that in the last 2 years, they generate around $500 million in free cash flow. This is a market cap of $5.4 billion. So instantly, this is smelling cheap. This is around 10 times free cash flow. Very interesting. I saw AI Predict is suggesting that it could grow significantly, but let's ignore that for now. What does management say in terms of guidance? Management is guiding to effectively $12 per share in earnings versus an $88 stock. So this is implied 7 times earnings. So this is definitely why this smells cheap. I definitely want to learn more. In terms of quality, does it have a high return on invested capital? I pull up the latest balance sheet and I see that they've invested around $1.3 billion into the business, 1.1 in current assets, 200 million in property equipment. I'm going to ignore the intangible assets, so the amount that they had to pay for other brands and such, and just look at the tangible capital tied up in this business. So around 1.3 netting of their current liability. So maybe around 600 million in tied up capital versus 500 million in free cash flow. So definitely that high return on invested capital. So I can understand now why it's passing the magic formula, why AI ticker chat might think there's tremendous upside, but what do they even do? Because once again, this is my first time looking at this. I want to understand this business. So I want to take get a 20-second summary. So that way I could keep figuring out if I want to learn more. So clicking on the summary button, I see that Crocs is a global brand, sells casual lifestyle footwear and accessories for women, men, and children. This is pulling from the annual financials and a bunch of different key SEC filings and having AI summarize it. Key iconic brand is their Crocs brand. They have proprietary Croslite material, which, molded footwear technology makes it very comfortable. Okay, so this is a very comfortable brand. So people are tired of wearing uncomfortable shoes. This is sort of an easy thing to wear. They sell primarily wholesale and direct to consumer. And another key point is that they acquired this Hey Dude brand in 2022. So in 20 seconds, you've gotten sort of a quick download on what do they do. When I look at the website, because I want to keep learning more, this smells interesting. I see that they've sold in 85 different countries. So this really is a global brand. And they sell more than 100 million pairs of shoes each year. That is tremendous, tremendous volume of Crocs shoes. Diving further into their presentation, I see Crocs brand is around 3/4 of their revenue. I see that they have various different geographies. North America is around 70%, but they're quickly growing in Asia and the rest of the world. And that their mix between wholesale and direct to consumer is about evenly split. And they're rapidly expanding their digital experience, around 40% of their sales now online and digital. And going back to this question of, once again, this is my first time looking at it. So I need to understand, why do people even wear Crocs? Like I've never worn Crocs in my life. I have an old pair of Birkenstocks that I wear like when I need to slip something on. But for the most part, it's like a running shoes for me type person. I don't, you know, I don't, I've never worn Crocs. But if you absolutely love your Crocs, I'd love to hear the comments below, because it's always, I thought it was sort of just kids' shoes, but clearly not. Clearly I'm mistaken. And that's what investing's all about. Investing's all about taking your perception and then saying, oh, I'm wrong. I got to adjust to reality. The reality is this is actually a very big global brand that people love. This isn't just a kid shoe. This is something, it seems to be a fashion statement. It seems to be something about being comfortable. It's utilitarian, that it's water resistant and easy to clean. They also have these gibbets, I think, which is for, people to modify their, shoes. Another key point is, for parents, a key aspect here, I think, is that you effectively have a shoe that is being easy to clean is a big deal, because, kids are always stepping in random stuff like, hey, a pile of poop, let's jump in it. And you're like, oh, dear God. So having something where you just get the water hose and like I could see the appeal there. Also the appeal of like kids. I think I was reading the book of John Quincy Adams, and like his son threw his shoes overboard on like a multi-week journey. And so like historically shoes were like, oh, this is the pair. But for kids, you're always losing them, they're dropping them, stepping in poop. And so maybe it's the appeal of it's also affordable. And so you have this like easy access, more adults saying, hey, I just want to be comfortable, affordable, perhaps a fashion statement. They're talking about different branding. They showed a branding with Taco Bell recently. This is based on, chatting with the 10K, because I selected the 10K, and you can pull up different docs if you want to learn more. And so I'm very curious looking at Crocs. I'm very curious, why does this opportunity exist? First, in full disclosure, this is not financial advice. Also, quick plug, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscribers. By the way, I'm going to be raising rates shortly, so now's the time to lock in the favorable pricing. So I'm exploring here, because honestly, my takeaway, and I'm going to jump to the end, and I'm going to then go through the data points. It's a little bit different from usual, but the end for me is that this smells really compelling and I need to learn more. And so in the next minute or two, I'm going to share the things that I'm like, maybe this is why this opportunity exists. Because I clearly, this is my first time reading about Crocs. I'm very intrigued looking at this. And so I look at this, and what's the first reason why the stock, might offer this opportunity, why it might be at this low multiple? Well, they paid, a couple $2 billion to buy this Hey Dude brand. They levered up their balance sheet. So whenever you have a levered balance sheet, it does create the risk of, hey, if there's a recession and sales go down, could you effectively go out of business because the debt holders, say, hey, you need to repay me, and you can't easily repay me. But that doesn't seem to be the story, because they levered up and they've quickly paid down a lot of their debt, and they're getting close to their target leverage ratio. And I'd also wonder if Crocs would actually hold up in a recession, just because I think of the lower price point. If you have a different data point on it, I'd love to hear it. So this is one data point. Another prospect is like people thinking that they overpaid for Hey Dude. Based on my quickly looking at it, it seems like they paid 13 times earnings. So this doesn't strike me as dramatically overpaying. I think they, paid $2.3 billion for a business that in 2021 generated $175 million in earnings. So this doesn't strike me as crazy foolish. I mean, this isn't like a stinky SPAC deal. This is, something's interesting here. Another key data point is, so their Crocs brand, which is once again 3/4 of their business, their revenue growth was 15% constant currency, but only 2% volume growth in terms of pairs. The rest came from pricing. So maybe there's concern that, they had to do some pricing because of inflation, and that their actual growth is going to decelerate from here. It's not like you can dramatically raise pricing each year and then just, completely squeeze your consumer. But seeing that they were able to raise by 13% is interesting. Are there other brands growing faster than the 2% that they did in terms of volumes? Maybe another data point is that they're only guiding to 3 to 5% growth in the third quarter. I think their margins are also slightly lower year over year. So maybe these are data points for why the stock is trading where it is. But honestly, 3 to 5% growth, that really doesn't jive, in my opinion, with a 7 times earnings multiple. Like, I would expect, 5 to 10% decline for that type of multiple, or Wall Street clearly doesn't think it's either sustainable or something. It's very weird looking at this. I mean, maybe it comes down to their profit margins, where just a few years ago, their profit margins were closer to single digits, and now it's, 20 to 30%. And so there's this uncertainty of where their margins go in the future. And so, as I think about all these different things, as I already mentioned, this is very promising. And so I want to learn more. So I made this video to show my initial view looking and learning about Crocs. I think a lot of investors might stop there and just say, hey, I'm going to buy, and maybe they'll work out for them. Maybe, clearly multiple different sources suggest that there's a lot of upside here, whether or not it's magic formula or AI ticker chat. So that's one path, and some people might just buy a basket of those types of stocks. Me personally, I want to dig more. I want to learn more. It's always interesting because there are companies like Monster Beverage that generated, tens of thousands of percent return over, the last few decades. And over that time period, there were all these times where investors were saying, hey, I think that competition is going to squeeze their profits in the future. And as a result, and they executed. That's the most important point. So you had this sort of valuation was kept low at times because investors were uncertain, and then they executed. And they were like, yeah, there is competition, but we delivered. And so if Crocs is one of these types of setups where Wall Street's skeptical, but they deliver, I could definitely see that tremendous upside, hundreds of percent upside, if they're able to keep growing. And so those are the types of things I'd want to learn more about. And there are a lot more favorable data points that I haven't even covered, in detail. For example, they have a buyback in place, which at the current valuation, I love to see. There's some insider buying. I think the chairman's been buying some stock for himself. So I like seeing these things. I think I need to spend some more time researching it. So what I'm inclined to do is do a follow-up, maybe letter, in the weeks ahead, where I dive into really 2 key questions. And these are the things that I'm thinking about, which is, one is, what's the durability of this business? Because clearly it's a good setup, but if the sales are here and then next year they're here, where it drops significantly because of some external variable, because maybe, tastes change, then you lose. But, so it's really a question of durability. That's the first one. The second key question is, do you have compelling growth in the years ahead? What's sort of the story? But do you even need growth if it already trades at this cheap valuation, like 7 times earnings, 10 times free cash flow? So there's a lot more for me to think about. I'll probably do once again a follow-up letter for my subscribers at Unrivaled Investing, as I explore more. And oftentimes that's what I do on this channel. I'm sharing ideas, sharing my takeaways, and sometimes it's not a fully baked bread. It's not fully baked. I'm still thinking it through. If you have a different take or you have a full opinion on it, I'd absolutely love to hear it. If this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.